And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, a daily show where we go through the stock market news, the charts, the information across commodities, companies, economics, anything grabbing our attention, and break it down for you guys so that you can better run your daily routine. You got Coach Tim here losing his voice this week, Matt as well, Mark, and we got old money Greg Holmes joining us as well on a day where now we have 3 days down, guys, 3 red candles in a row as the market is creating a little bit of a pullback here. Lots of stuff in the news, obviously. I mean, there's a bunch of company news. Tesla did not make this cut of the S&P 500. We'll look at the chart reaction on that. You've got a tech sell-off again here, and really a lot of technical sell-off across many major stock indexes. Nikola, General Motors going to a strategic partnership. Interesting in that front. Other corporate news and oil down big here today. Let's get right down to business. 3 red candles in a row as the market is creating a little bit of a pullback here.
Maddie,
You got
echo.
Oh, I know.
Yes.
I had it.
Brother.
I was on it.
It's always a little meta
I'm
when
with
you
you.
hear your own voice coming through the speakers. There's no
Oh,
question
yeah.
about it. How you doing this morning, brother?
I'm doing really good, Tim. I'm excited to be here to break down the market with the team, and a lot of action today happening. And obviously, as we're seeing these sell-offs develop. The biggest question is, when do you start pushing those chips back into the middle of the table and start getting back aggressive? But I think as of right now, it's a wait and see approach, right? You want to really kind of see support form here. You want to see the market show their hand. And as of right now, we haven't seen it. That 3,400 zone that we talked about all last week tried to play support last Friday. Obviously, the futures market was open yesterday, and it was a really boring day in the futures market. But once that European market opened up, you started seeing volatility to the downside. And we'll look at that real quick on the 30-minute chart here, Tim. So as we saw that market on Friday really kind of test that 3,400 zone, really kind of fought for it right there. You saw the market open up on Sunday, and it kissed off that 34 handle a couple times on the initial open on Sunday, and then all through Labor Day. And I hope Team Tackle had a wonderful Labor Day. Had a wonderful and safe Labor Day. But you saw it kiss off that 3,400, and then throughout the entire Labor Day session, you really didn't see anything of any substantial price movement in the market. A little bit of a double top kiss off 3,450, but right here, right when that European market banking system opens up, and then right here, once the British starts opening up over there in the FTSE and the London Stock Exchange and the Bank of England, you started seeing price actions start to really kind of get clipped. And then once it broke that 34 handle in the middle of the night, there was really no support there. And now we're trying to find it right there at 33.50. So even though since the market really did open up on Sunday, it was really kind of a boring market up until that European open yesterday. And then you just started seeing the sell-off happen. And now that you're seeing intraday support levels getting broken, you're looking at your daily support levels, and right now you don't have a lot of support where it's at, obviously, when it broke that 3,400 level, but you're looking right there at about 33.50 as a short-term support level. That certainly could hold, but we need to see that hold both from an intraday perspective as well as confirmation on the daily perspective. But what I'm really kind of looking at from a next support that hypothetically could form to where we might see it as a pretty decent buying opportunity is right where that 50-day moving average is. It also coincides with the significant hold number of 3,300. And so I think with support getting violated on the overnight action at 3,400, we're looking at 33.50 from a short-term intraday support level. Maybe that holds, maybe it does. And I think there is an edge to the downside here. But then ultimately, I'm looking at that 50-day moving average to see if that dam can certainly hold.
Mm-hmm.
And on the 50-day moving average, Matt, we haven't had a clean test of the 50-day moving average in this entire run-up. Back there in June after the shakeout, we almost came down, but we haven't had a test of that 50-day moving average. And, the way things are looking, we might.
No, I don't. You never want to say you will. You want to read it from a technical perspective, but that's the level I'm personally looking at, that where I expect that next major battle. Right, 33.50 could hold. Nobody would be surprised today if we see 33.50 hold and see some price appreciation coming into the last few hours of the market. But to me, that's a hypothetical scenario. I do expect that 50-day moving average to be hit here. Like I said, I do think you have an edge to the downside. Anything can happen from an intraday perspective. The edges to the downside, ultimately, I think we're reading that 50-day moving average as that next battle zone, as very similar as we saw 3,400. You know, it tested the 90 EMA on the downside, it tested the 20-day moving average on the downside, but we were really looking at that zone of 3,400 as that battle zone. The bears won that battle zone. Now we're looking at that 50-day moving average.
Mm-hmm. You know, Matt, as you're reading these technicals, one thing you said in pre-production, you were saying you just don't buy the dip, you wait for support to hold. I mean, are you waiting for intraday kind of support to develop? Is this going to take a couple of days? I mean, even if 3350 holds today, doesn't mean we still can't test that 50 at some point this week, right? So it takes some time to churn out these bottoms. Yeah.
It's the exact same thing as we were talking about last week with 3,400. Yes, you're looking at it from an intraday perspective. And so let's drop it down into that 30-minute chart, which is my favorite time frame on the intraday perspective. You're looking at that 3,450 zone right there, and you see the slowing momentum here. Okay, and the reason I say you still have an edge to the downside despite the slowing momentum is as you create these horizontal support levels at 3,350, you still have decreasing short-term moving averages, you still have decreasing resistance zones, and so you have it as a short-term low base type scenario. And with low bases, whether you're looking at it on an intraday chart, a daily chart, or a weekly chart, the edge, and it's just an edge, but the edge is to the downside there. And so that's what I was talking about in terms of, yes, you're looking at that 30-minute chart or the hourly chart or the 15-minute chart, whatever your favorite short-term time frame is. You're looking at that for slowing momentum. You're looking at that for potential reversals, but you're not going to simply buy the dip and gamble in the marketplace. That's not what Team Tackle does. We wait for confirmation. And so we look at it from a slowing momentum perspective, and you're saying, yes, as a buyer, this is the first thing I need to see to start thinking about, not doing, but to start thinking about pushing those chips to the middle of the table and taking a stab at the marketplace. If we see a double bottom, double top, and the market comes back up into 33.75 and double tops there, that's the second thing you want to see in the short-term price action as the buyer. But ultimately, you want to see it start setting higher highs, higher lows from an intraday perspective, similar to what we were seeing over here in the massive run-up. And so my perspective is very simply this. If this does prove historically to be that buying opportunity where we all look back and we say, kind of like we look back here, right? As we all look back here and we say, okay, yeah, that historically was a wonderful, wonderful, wonderful buying opportunity. Well, that wonderful, wonderful, wonderful buying opportunity took a good week and a half just to form that double bottom on the daily chart. Took about 2 weeks before it actually broke out and confirmed that as a support level. And then after all of that 2 weeks of slowing momentum, double bottom, double top action, the breakout after 2 weeks, after that, you had a run in the market that pushed up about 15%. And so, yes, I think we need to see this as a buying opportunity, but it's perfectly fine to say, I need to wait for confirmation. I'm looking at the intraday levels to start understanding where those support levels could form, knowing full well that it could take a little bit of time for this to really look at it from a confirmation perspective. But it's simple to me, Tim. If it does confirm, and that is an if at this point, well, guys, if we truly do get that next leg up, I think it's okay to wait 2, 3, 4 days, in the market before you get aggressive. There's going to be opportunities over those next 2 to 3 to 4 days, no doubt about that. But I'm talking about getting aggressive back into the market on the bull side. And so if this does prove historically to be a support level, be patient, wait for confirmation, because if it does see that next leg up, there's a lot of room to move to the top side.
Mm-hmm. Let's bring in old money Greg Holmes here. Coach Holmes, obviously
he has the best nickname at tackle trading.
What was Tyler's nickname we gave him? The Architect? That's pretty good too.
He's the architect.
That's pretty good too, but I like
Old Money Holmes is great though. I love
Old Money Holmes is better for society, no doubt about that. But the Architect,
Architect's pretty badass.
If you're a Matrix fan, as I am, The architect is.
Pretty dang good as well. I
It's a good
agree.
one.
Yeah. Old Money, how you doing there, sir? First off, and then second, just how are you approaching the 3-day sell-off here in stocks? I mean, Greg, what's your take on everything that's going on?
So I'm doing well. Thanks for asking. Excited to be here. I don't get on the halftime report as much as I'd like to, but this is fun to hang out with you guys. So, as for the pullback here, I'm, because I'm old money and I still kind of believe in the old ways. I was looking at the market before and kind of the way that Matt just talked about it. You had that 15% rise after the last, decent pullback that had to make a double bottom, double top. It had that big 15% rise. And for myself, looking at just everything in the market, so, it didn't matter what sector was, technical, technicals, tech, I should say, communications, all that stuff, it all seemed a little bit overvalued to me. And so I was expecting some kind of pullback at some point in time. Now, the way I'm approaching this market is I've battened down the hatches. I've had some insurance on, put some insurance on last week. You know what I mean? I was kind of expecting this, but the beauty of the market is you never know when it's going to come. So you got to kind of pay attention to that slowing momentum, as Matt put it. For myself, I'm in ultra patient mode right now. I think the lesson that Matt was trying to say, at least what I got from his take, was there's always lots of upside to have. You can spend your money wisely. Be patient. Wait for that confirmation. Wait for those solid risk reward entries, and do better for yourself if you're patient. So for me right now, this market is a test of patience, and caution rules the day as far as I'm concerned, because I don't know if this 3-day sell-off is going to be like it was back in June, or is it going to be more like February? And until the market tells me what it wants to do, Old Money Homes is just sitting back watching it play out.
Yeah. And I do like that word patience. I think patience is very, very important for new entries, like Matt was talking about as well. Let's support for them, even if it has to double bottom or whatever. The technicals, read the technicals, trust the technicals, no question about it. Patience is also very important when it comes to, managing profits and all that kind of stuff. But Matt, you should not be patient if your stop losses are being hit here today. If your trade plan has gotten to the point where you're supposed to get out based on a predefined plan,
Get out.
that's not patience. I do see beginners. They misuse that word sometimes and think they're being patient by waiting for a loser to try to make a bounce to come back. And I'm not saying you got to capitulate on a down day, but if you had a predefined trading plan, execute your predefined trading plan.
I'm talking to non-team tackle, because team tackle knows not to chase the dragon of dreams and profitability. They don't make decisions based on that. They make decisions based on technical analysis. They make decisions based on position sizing rules and so on and so forth. But I am talking to the new traders out there that are experiencing this for the first time. And I'll just tell them for the same thing that one of my mentors told me when I first took my first heavy loss. And I was making all the emotional decisions that everybody makes when they're taking a loss. And I was doubling up to catch up, and I believed so much in the value of the company, even though I was swing trading it. And he basically just said, and I'll leave the colorful language aside. He basically just said, you don't have to make the same money in the same stock in the same time frame.
Mm-hmm.
You've got to remove that emotion from the equation. And so what I say to tackle all the time is, you're not here to be traders for the next 2 days. You're here to be traders for the next 20 years. And that's how you have to think about this. It's okay in running a business to take a loss. That's okay. You're running a business. It's okay to take a loss. That's going to happen. It happens in every business. Okay. Learn from it. Be patient from it. Go make it back, but do it in something else and do it in a different time frame. You don't have to chase. You don't have to chase on a day when you're losing. Make it back tomorrow.
I'd like to jump in there too. I guess I should have been more clear with what I mean by patience. My patience is getting back into the market.
Yeah.
There should never be any question, and I tell all my students this, and pretty much anybody who will listen. Get out when you first feel the inkling to get out. It's hopefully because you've built the proper trading plan. But your first instinct when it comes to getting out of a trade, and preferably, like I said, you built it ahead of time, it's probably right most of the time, because as Matt said, you can always get back in later and you can always find another opportunity. And I find that happens a lot with a lot of newer traders, beginning traders. They feel like they're missing out on an opportunity. FOMO is such a big part of trading when you're brand new, but the patience that I'm talking about is knowing that, hey, if you miss one thing, it don't matter. There's something else coming along. Look at the reports we do each week. Okay, we do 15, upwards of 15 picks, every week, and they don't all trigger at the same time. So there's these opportunities that are always there. So the patience is, waiting for your spots, waiting for your confirmation, and then getting involved. If you got to get out early, save yourself the heartache, and wait for your shot to get back in. As Matt said, you want to be putting all your chips in. You want to be putting your chips in with aces or kings. You know what I mean? You don't want to be putting it in with the Doyle Brunson 10-2.
Well,
you know what I mean? So
only Doyle Brunson can rock that 10-2 though.
That's right.
Doyle can rock it, but
right.
Greg, it's easier said than done though, right?
Oh, it is.
It just is, because we were drafting for our fantasy league. We've been in this fantasy league for 15 years now. Same dudes, 15 years. We're drafting for it. I've literally done zero research into this. I haven't done a mock draft. I don't even know who the rookies are playing. I've been so checked out of the NFL in the last 6 months. I didn't even know they were going to have the NFL this year. And so all of a sudden, Coach Frank is like, "Hey, we got a draft tonight." And I'm like, "Really? We do?" Right? And so I spent about 5 minutes researching kind of ADP rankings and whatnot, and I drafted my team. And then Frank and I spent like 2 hours negotiating a trade after the draft was done, because and so was he, I was so emotionally wrapped up in the players I chose for my team. I'm like, no, he's going to have the greatest year of all time. I spent 5 minutes researching this, but I got emotional about it, and so did he. We spend time, picking the stocks we're going to trade. We get emotional about that. We get sucked into the emotion of it. It's not easy just to be that market assassin where you just don't care about the name of the company and you just care about the price action. I get the emotional psyche of this. Believe me, I'm the same way everybody else is. But you got to force yourself to read those charts so that you remove that emotion. And when I talk about pushing those chips in, I'm talking about getting aggressive. There's nothing wrong in these types of environments, waiting for a little bit of intraday confirmation there to take a stock you're looking at, take a zoom here. There's nothing wrong in looking at an individual component of the market and saying, you know what? I know the market's skittish right now. I know it's a little fearful right now. I know it's a little crazy volatile right now, but I really, really like the opportunity I'm seeing in Zoom. I like the double. I like the intraday slowing momentum at 350. I like it sitting on that, 9 EMA. And there's nothing wrong with saying if it does confirm on Zoom, even if the market doesn't confirm. So let's say we confirm above, let's just say 370 there. So there's nothing wrong with saying I'm going to take a stab on Zoom based on the analysis I'm seeing on Zoom, even though the market hasn't necessarily confirmed right now. So if you see an opportunity in the market, don't hesitate to take that opportunity. Just do it from a conservative perspective. If your position sizing rule was, say, for example, 4% of portfolio in a delta trade, lower it to 2%. If you're looking at buying call options on Zoom, instead of doing that, look to do a bull call spread where you do something where you mitigate the risk and you have a fixed risk to a certain extent. So it doesn't mean you can't go out there and play the market from an individual perspective. Simply because the market violates short-term support doesn't mean there's not opportunities. Just be conservative. Lower your position size rules. Wait for additional confirmation. Switch to a more conservative delta strategy like a spread instead of a directional speculative call option. So there's going to be plays to have here. And I love what Swin said just a little bit ago. There's opportunities abroad. There is opportunities abound here. There's going to be a buying opportunity here. use this moment to really you build your watch list, build your candidates, that when they do confirm, you're ready to rock and roll.
Mm-hmm. Yeah.
On this, sorry, Tim, if you don't mind me jumping in. So like Zoom is a great example here. You know, when I talk about patience and I talk about opportunities, you know, even if you are more conservative, as you said, you could go intraday, Matt. And even if you're late to the party, you know, look at the distance that this has to go. We're sitting at 360 right now. 470, 480, right? You've got so much room there because of the pullback that this has had, and because of the action beforehand, that there's a whole lot of opportunities here. And that's kind of what I was saying about new traders versus more experienced traders. You know what I mean? New traders are going to see this and they're going to go, oh man, I got to catch that whole move, right? And once you get a little bit more experience under your belt, you start to change the types of trades you do and all those kinds of things. I look at this and I go, yeah, you know what? I could make, 120 points, but I'd be happy if I made 80 points on it. Do you know what I mean?
Yeah.
And at least I would be putting myself in that position where it's already going where I expect it to go. I give it a lot of latitude. I'd be super conservative with that. And I'm still going to have a great trade. And this is what I was kind of alluding to earlier is this is just one chart. There are 9,000 equities in the market. You can go out and find a million more opportunities just like this. And all it takes is, some good technical analysis, a little bit of patience, and wait for your opportunities to strike. So.
Well, and to go on that, just specifically looking at this one on Zoom here, Greg, you have, I promise you can map out a positive reward to risk ratio on any trigger above 370 all the way to above $400. Yeah. You could map out a positive reward to risk ratio on that. You have time for this to set up. And if you miss out, like you said, Greg, if you miss out on the initial 10, 15, 20 point surge, that's okay, because now you're joining in with a bigger probability. Even though you're giving up some of your return there, you're also getting, in conjunction with that, you're getting a higher probability, because now you got the team on your side at that point. Right now, there's a battle being fought on Zoom the same way there's a battle being fought in the marketplace. You want to see that battle be won on the bull side before you jump in, because your money does not move the market. I mean, if SoftBank's money doesn't move the market, ours certainly doesn't.
Well, there's a lot of speculation they are, but I find those stories to be
whatever.
kind of
SoftBank, get out of here.
Those are Wall Street guys talking towards each other through the news media, in my opinion. I think.
Oh yeah, these same Wall Street dudes that have been talking about rampant speculation in consumer America and how it's creating a disconnected market cycle, and yet now it's proven that SoftBank was out there speculating on 20 Delta call options. Okay, SoftBank, get the hell out of here.
So it wasn't all the retail bros?
Anytime you hear Wall Street saying about any bad behavior, realize they created the bad behavior.
Correct. And I do think it's funny that it's not just all the retail bros, buying all the
what is up with the incessant need of market analysts to try to give causation to every specific daily move? I mean, what is that obsession?
I don't know.
They don't know how to break down a chart, and they need content.
They don't explain technical analysis.
They don't actually know how to teach fundamental analysis, behavioral analysis, economic analysis, technical analysis. They don't know how to actually go into depth on those subjects, because it's just quick take analysis, quick take analysis, quick take analysis. So they have to give it a headline, because that's how their mindset works for decades. That's how their mindset works.
So you guys are telling me that the market's not down today because Trump was talking about China yesterday?
That was talking about China for 2 years.
Hold on.
No.
I read the same headline you did at Market Watch. No, Market Watch. You need to learn how to look. Market Watch. It's really simple. I'm going to give you a quick take lesson. Okay. There are certain time periods when certain markets open up. Market Watch. Okay. Now, this is when Trump was talking yesterday, right here. That's when he was talking. There was no market response. Now, Market Watch, there's a very important stock market opening in the world, and it's the European stock market. And at midnight, my time, which is 2 a.m. your time, that's when the European markets open up out of Frankfurt, Germany. And then all of a sudden, 1 hour later, this is when the London Stock Exchange and the Bank of London open up. That's what we really saw. You saw negative information coming out of Europe, and you saw Boris Johnson talking about negative information out of Brexit. And even though we have not cared about Brexit at all in the last year and a half, this market, when you're at a precipice of support that is vitally important to the market, I promise you the market's going to take any news out there as a way to push the market one way or the other. It had nothing to do with Trump talking about China yesterday. Absolutely nothing to do with it.
It's so funny. It would take 5 minutes literally to go to an intraday chart and look at when the market started selling. Like, I just don't get it.
Honestly, they saw Trump talking about China yesterday. They saw the market was down today, and they forgot to even look at the cash open. And since the cash open, the market's done nothing.
Yeah. Let's break down the technicals a little bit.
I feel bad for anybody that actually gets their news from traditional media.
Oh,
hey,
if
listen,
you don't have a discerning eye,
I feel bad. I just feel bad.
Listen, I love it because every once in a while, like Market Watch will come up with a headline and it's like stocks down today, and that's all they got. And I love it because I was like, I know they want to type stocks down today and we don't have a freaking clue.
Yeah.
One day I want to see if that headline will be the happiest day ever.
I would click on that article. I mean,
I would click.
Stocks down today. If Market Watch came out with the stocks down today because the market triggered stop losses underneath the short-term 9 EMA, I'd read that article actually.
You know what's funny?
Truth in advertisement, boys.
You know what's funny is I follow a lot of news sites from around the world, and when you follow the country India, their news sites, they will attribute market causation to technicals on the charts. Markets down 6% today, support violated. And so they actually do incorporate technical analysis into their market headlines, which I think is a fascinating cultural difference.
That is very interesting, actually. Let's break down the technicals a little bit further here, Matt. One thing I want to do today is go through the FANG stocks as well. I mean, we've had all these high flyers and movers. I think breaking down some of the individual components would be valuable. So,
I just want to ask the question: Do you guys believe that if this market does represent a buying opportunity, that it's going to be led by the Apples, Facebooks, Netflix, Amazon, and Googles of the world?
This market right now, 100% in the short term.
In the short term, just the short term.
2 to 7 trading days. Let's say before the September expiration, which is the monthly options expire next Friday. It is absolutely going to be led by the big 5. So.
Yeah, and I agree with that as well. Looking at Apple here, you got a deep retracement on Apple. There's no doubt about that. You're really looking at that 110 level of support on Apple. You're right there above the 50-day moving average at 110. The 110 is right there. The previous low base type technical scenario you had back in August of this previous month. So you're really looking at that 110 level, 110 level to hold on Apple. But one thing I do think is really helpful in these environments is to not only look at those daily charts, but on these deeper type retracements, take a look at the weekly charts as well, because the weekly charts can show you a little bit of a different picture, especially when you're looking at short-term deeper retracements to see the strength of those support levels. I'm liking what I'm seeing from the weekly perspective. Now, obviously, we're 1 day into this week. We need to see that 110 level hold. But if 110 does hold on the weekly, and which also coincides with the daily, I'm looking at this as a buying opportunity in Apple. This has been a runaway freight train for the last 6 months on Apple. You haven't had a lot of opportunities on retracements on Apple, and you've not seen anything remotely like this level of deep retracement on Apple really since we saw the beginnings of the pandemic. And so I'm looking at this as a buying opportunity, but we got to see that 110 level hold there on Apple. So make sure we're looking at that 110 level on Apple. On Amazon, Amazon, a little bit of a different perspective on the weekly chart. You had that breakout of that 3,200 level that we saw. This really kind of feels like a fake out scenario from a weekly perspective, where you had the breakout, it quickly retraces underneath the breakout channel, and now you're clinging on to the hopes that that 9 EMA is really going to hold on the weekly perspective. and it also reclaims these breakout channels right there at about 3240 by about 3300. If you can get back above that, yeah, I like that. I like that from a market perspective, but I don't see Amazon nearly as much as I see Apple as that stock that you would be looking at it from a pure technical type strength, type buying opportunity. You're clinging to the 50-day moving average, but when you came underneath those breakout channels on Amazon, it really did change the dynamic from a technical perspective. Whereas Apple has that weekly bullish retracement type setup, this one feels like a little bit of a failed breakout on the weekly perspective. So Amazon clinging to that 50-day moving average, I do think that if that level does hold, I certainly see that helping the market, the Dow Jones and the broader market, the discretionary market as well. But I don't see this as a really, at least for me, I don't see this as a thing that you're looking to buy the dip on Amazon. And I could be wrong on that. There's no doubt about that. But when I'm cross comparing Apple versus Amazon right now on those weekly charts, I don't know, for me at least, Apple really does seem like the one I think you should be looking at. Now, in a couple of the other ones right here, Facebook.
Matt, before you
ahead.
move on from Amazon, nothing scares me more from a technical perspective than when you have a massive moving average pocket between the 250. If you go look back at some of the biggest broad market sell-offs since 2018, this is the technical condition that existed. You have ferocious uptrend and massive pocket between the 200 and the 50-day moving average. I mean, I think this is the first test of the 50 on Amazon since, it broke the 50 clear back in late March, early April, whenever that was. So, I mean, this is where algos can go to town in the short term. So, I mean, and I love it. I think all traders that are new, and even if those that are not so new, I mean, if you go back and listen to the first 10 minutes where Greg and Matt were talking about patience and discipline and exercising caution, I think it warrants a re-listen to go do that. Plus gives us another click on YouTube, right?
I honestly, I don't even see this, like, where are you confirming here on a trade here on Amazon? I mean, to me, I don't think you could confirm until you break out of 3,400, and you just got a ways to wait on that. Whereas Apple, I just see it a little bit differently, and I do agree with James as well. Apple does have some news coming out with 5G that could also support Apple's price appreciation there as well. I just have Amazon more as a stay away. Now, obviously, it's very important to the market, and holding that 50-day moving average, I think, is very, very important for Amazon. We have not seen a test of that 50-day moving average, post-pandemic. And so it's going to be interesting because Mark's absolutely right. Momentum works both ways, guys. It works both ways. And as you go up, you don't have a lot of strong support levels, and you don't have a lot of history in testing these moving averages. Whereas, look at it like this. You have a lot of history testing that 20-day moving average. You have a lot of history testing that 9 EMA moving average. Well, the first time it hit the 50, that's your first test of it. We don't really have a historical understanding of how those algorithms and how Wall Street and the institutions and hedge funds and all the very, very active participants here, perform on Amazon at that 50-day moving average. I hope it holds. We're all bulls. I hope it holds. But at the end of the day, this is the first time we have seen it. So it's kind of a stay away from that perspective. Now, moving on very quickly, let's take a quick peek at Google. Google, a little bit similar to the analysis on Amazon. I have it slightly different. You are retesting that 50-day moving average. You have had some history testing that 50-day moving average. In fact, it's clean to that 50-day moving average multiple different times during this recent run-up. So you do have a little bit more of a statistical probability here on Google than you do on Amazon. I also have the momentum on Google a little bit differently than I do on Amazon as well. Whereas I saw the momentum, a little bit of slowing momentum, a little bit of a fake out analysis on the weekly chart. You have some similarities to that on Google, but the one key difference is you have a very, very, very clear higher highlight right here, and you are still looking at this as a higher low potential that could be an opportunity. Now, what I would like to see here on Google Is that 50-day moving average hold? Obviously very similar and as important as Amazon holding that 50-day moving average. But unlike Amazon, where I really didn't see a potential trigger because you had to wait till it got above 3,400 to really see that technical trigger, here it's above 1,600. If you can hold that 50-day moving average, confirm back up above this previous pivot here, which also coincides with a significant whole number of 1,600, which is right in that pocket of moving averages as well, I think at that point you might be off to the races for Google. So keep an eye on Google. This is, to me, is not a let's buy the dip on Google, let's buy the dip. Absolutely not. Amazon's a stay away from me. Google above 1,600, that could be a potential swing trade there. So I'm looking at that on Google. I still think Apple is perhaps the best of those bunch from a pure technical scenario. Facebook here is an interesting beast because obviously it's shown a little bit more relative strength than Apple, Google, and Amazon is or are. It's still well above that 200-day moving average. You have this old historical resistance zone right there at 370. That's where it's testing here today, is right there at 370. In the last couple days, if you drop this down into that 30-minute chart, you're trying to find that double bottom scenario right there at 370 as well. You still have decreasing resistance zones. You're trying to find that intraday support level right there at 273, trying to get above that confirmation. We'll give that right there at 280. But if you can get back above 280 here on the intraday on Facebook, and you'll see this intraday trend line right there during this retracement. Let me do the top there. So you see that intraday trend line coming down, 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 down. That's where it kissed off right there at that 280 level as well. If you can confirm above that, there is an opportunity on Facebook, in my opinion, even though I do not love this standard retracement. But when you're dealing with the market sell-off that we're seeing in the last 3 days, you're not going to get these like I believe we call them textbook retracements, right?
Mm-hmm.
The ones that we put in the textbooks. They're going to be a little choppy. They're going to be a little bit more. They're going to be a little more special. They're going to be a little bit more unique in their development there. But you got to see this as a bullish retracement, even though it came off a high base type scenario. And as long as 270 holds, confirming above 280, I think you can map something out there on Facebook. Microsoft company I just really, really, really love. I don't see this as a swing trading opportunity. It's broken its 50, it's broken its 20, it's broken its 9. It broke the historical resistance level. So this is more of just important to the market. And quite frankly, important to Microsoft. We still got some range, but I would not, as Microsoft, I wouldn't worry from an investor perspective at all on Microsoft. Even if it went down to 180, I would not worry about it on Microsoft. But in terms of position trading, short-term trading, Microsoft, you're looking at 200. 200 holds, everything's golden on Microsoft. 200 doesn't hold, we got a different scenario there on Microsoft. So when you're breaking down some of these very vital stocks to the market, you're seeing it's similar to what you're seeing in the S&P and what you're seeing in the NASDAQ. They are opportunities, but you are looking for confirmation there. Give up some of the return for the additional probability, and if it doesn't confirm, let's update it from a technical perspective of where we're looking at next. But as of right now, you're seeing an opportunity develop in real time, and we'll see if that actually confirms. Because those trades, if they do confirm, guys, we're talking tomorrow, we're talking Thursday, but we're talking this week.
Mm-hmm. Mm-hmm. Yeah, it's a very important time for swing traders. There's no question about it. When you get these kind of pullbacks, and they are not traditional.
Are
in
you
that
kidding
regard.
me?
Yeah.
Swing traders love this.
Yeah.
They love this. This is amazing. Yes, you know, people are going to take losses. Look at the next opportunity. We have not gotten. Think about it like this, guys. It's the same thing we see over and over and over again. How many times do you hear people complaining, oh, I just want to pull back. 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 And then when they get a pullback, they're like, yeah, but what about this? And what about that? And what about this? No, you got your pullback. Do your job.
Mm-hmm. Yeah. Yeah, the volatility's got to be welcomed by any veteran, obviously. I mean, even like you, Mark, you use this opportunity to sell more naked puts. Greg, you're updating your watch list and waiting. Matt, I love the breakdown on the technicals on those FANG stocks. There's a lot of great opportunities. I'll give you one more, by the way. Baba, which is the next biggest company by market cap in the entire market. I like to pull back on Baba. Out of some of them, actually, I know that you've got the China
It
risk and all
reminds me of
that.
Facebook.
You've got that old resistance, new support potential developing on that one as well. So you've got your picks, right? And every trader is going to have to evaluate which ones they like the most. But
Listen,
there's gonna be
I'll tell you,
opportunity.
for credit traders, for naked put traders like Mark, and for bull put traders that love selling their credit spreads, they love this. Are you kidding me?
I mean,
Hold on, Mark. Increasing volatility, sitting at support allows you to sell even further out of the money than you could even a couple days ago. You could sell. I'm not going to look at the option chain. I guarantee you could sell a $200 strike price right now in the October month and still get a decent credit. You know, Mark, Tesla, and we'll break down Tesla. But all of a sudden, you know, Tesla has this big dip, and you know, people are freaking out about it. But Tesla has this big dip. Well, all of a sudden, Mark, the big bear on Tesla, who literally, I mean, let's give Mark some credit here. Called this shot last week. We made fun of him. Tesla's down 25%. Tesla, even more than about 20, 26, 27%. It's not down to 40 yet, but man, give him some credit. But yet, what did he do today? He went out there and he said, you know what? I love the volatility on Tesla. I love this. I'm going to go sell an October naked put at 129. I'm going to get a 10% return on investment. And if Tesla goes to 129, yeah, I'm willing to buy this high flying company at 129. Even somebody who hates Tesla.
Yeah, I hate Tesla.
Found a way to create cash flow.
But like I mean, once again, as a trader and a thing, and plus I got to say something on Tesla that got me thinking. It's still overvalued and bubble and ridiculous, even at these price levels. But I was driving home the other day and my daughter's like, Dad, are we going to get a new car? And I was like, I've been thinking about it, and she's like, are we going to get a Tesla? And I was just like,
hesitated there for a second. You're like, let me create the cash flow. Let me see if I can.
And then I had a guy who I really respect back from my Magic the Gathering playing days. And he was showing a picture of his new Tesla. And I was just like, and then when Tesla's down 70% and I saw that volatility, I'm like, listen, I'm going to, it's $110. It's a huge annualized return over 100%. I'm like, listen, I'm willing to gamble on Tesla at a certain level, not these levels, but at a certain level. But like Matt's point is, when you have an increase in volatility, it doesn't make it easy for the Dave Portnoys of the world, who's just like, hey, it doesn't matter. Let's just pick stocks and go up. But the more experience you have, and depending on your certain systems, these markets can be marvelous. I mean, I don't think, and I don't think anyone else here thinks that the bullish market is dead. I think it might die sometime in the next 6 to 8 months. I think we could go into this wicked consolidation phase. But like, I mean, that euphoria isn't dead. That rampant speculation isn't dead. This is an algo driven and it creates opportunities. It's just, what signals are you using? That patience, discipline. And I love what Matt just said. Be willing to give up a little bit of return. I mean, because in order to get more confirmation, because new traders and even old traders, you're so fixated on like, man, I got to get the best price. And if I miss out in a V shapes, listen, that's foolishness talking. Listen to what Matt said there. I think it's a good ism. Be willing to give up a little return for more confirmation. I think those are words to live by as a trader.
Matt-isms don't usually go that logical. Matt-isms usually go, you know what, that's like trying to swim in a field of sharks. That's how Matt-isms go. But Tim, I got a question for you. Did Mark just have his GoPro moment?
That's interesting.
I don't know what that means.
I know you don't. Okay. There are some in tackle trading that have been long enough to know the GoPro reference there. GoPro was, when I took a challenge of trying to see how quickly I could get GoPro to zero cost. And I bought GoPro at 29. And within like 4 months, it was like $9 in price. And I was just writing cover call. Greg, you would have been proud of me. I was just writing cover call after cover call after cover call.
I remember that, Matt.
Like I was buying them back like every like 3 days, just aggressively selling cover calls to offset risk. Mark saying, ooh, I might own a Tesla if I can create enough cash flow environment. And then all of a sudden Mark owns Tesla, and for the next 6 months he hates it.
Oh, listen, if I get put Tesla at 129, I will become the biggest Tesla advocate in the world. Are you kidding me?
Not if Tesla goes to 40, you won't.
He'll be selling used cars, used Teslas on the street.
And mind you, Mark, I was put GoPro to me at 29. It was 90 3 months before that.
Yeah.
Man, listen, if Tesla goes to 40, then a lot of people are going to be hurting a lot more than my 100 shares, right?
Yeah, no doubt. No doubt. No,
wasn't that stock $2,200 last week or something before the split?
Man, listen.
Oh, it hit 2,500
2,500,
intraday.
yeah.
Yeah, 2,500. But guys, same conversation with Tesla though. I mean, that we were talking about with Apple, the same conversation we were talking about with Zoom. I think you got to see this as of right now for people that haven't been playing Tesla. I think you got to see it as a buying opportunity, but you can't dip your toe in that water right now until you see the market see it as a buying opportunity. Okay. And so, I like what I'm seeing. It's in between the 20 and the 50. It's setting on the, think about this. It's setting on the pre-split announcement price action, the old resistance right here, setting as that as a support level. Now, obviously Tesla had some very nasty news today that they were not invited to the dance. I don't know why. I haven't seen any logical reasons why they weren't invited to the dance.
Just speculation. I mean,
Yeah,
the S&P hasn't come out and said anything, so it's all speculation at this point. I mean, they did not get included in the S&P. It was a foregone conclusion by some analysts, but the S&P never said that. So people were making assumptions early on in this process just because they had gone profitable. So yeah, Matt, I read a bunch of the speculation, but quite frankly, it's so early to even give it any credence. Who knows?
Yeah, and I don't either. Maybe the committee that was just looking at the PE ratio and saying, can we really add 1,000 PE ratio into the index?
Yeah.
Can we really do that? So maybe there was some of that. Maybe it's just delay until next quarter. I mean, whoever knows. And Damon, I agree with you. I mean, it's even if it goes to 120, Tesla would still be overvalued from PE ratio. And I am not an investor in Tesla. I'm talking purely as a short-term trader here. But I am seeing it as a short-term buying opportunity. But you can't, like I said, you can't be the first to dip your toe in the water there. You got to wait to see your buddy dip the toe in the water to make sure they don't die here. And so wait for confirmation. It's okay. It's okay. Some of these negative news days create opportunities. It's okay. Wait for support to actually confirm at 340. Wait for the upward movement in price to confirm above 370. Again, if this is historically proven as that buying opportunity, it is perfectly okay to give up some return for additional probability.
Mm-hmm. Yeah, and obviously that news on Tesla hit the wires over the weekend. It's been there for a few days, but this sell-off, in my personal opinion, obviously it is part of the news driven, but even if Tesla didn't have that news, they'd still be down today with the market, obviously. So some of this is market price action.
This is swing trading 101 though.
Yeah.
You're looking at this on Tesla as a buying opportunity here. You love the hammer candle. What did you not get? You never got confirmation.
Mm-hmm.
You see here another dip in price. You're seeing it as a buying opportunity. You got to wait for confirmation. Now, if it does not hold at 340 though, this is one of those moments where it's that last support level. Right? It broke the 9 EMA. It broke the 20 EMA. It broke 420, which is only important to Tesla. It broke the 20. It broke, and now it's sitting at the 50. And if you break the 50, you no longer have a higher low scenario. So if it violates that last, ditch effort to hold support, you're no longer looking at this. And I know you don't love Fibonacci's, but I love to trigger you. So if you look at this from a Fibonacci perspective, Tim, okay, you see it kind of trying to cling on to that last ditch effort right there. If you violate that, you're underneath 78 and it is party over. You're done. And it doesn't mean Tesla doesn't automatically rebound. No, you just no longer have the edge. You no longer have that probability factor. You have hope and 3 wishes with a genie. That's what you have.
78% retracement into the 50 period moving average. That is a deep retracement, Matt, even for
It is.
Fibonacci, retracement, no question about it. So it's got to find, this is the last line in the sand from a short-term perspective. I'm with you as well. It's got to try to fight this and hold this if you are a bull. And if you are not a bull, you're probably watching for a breakdown on that 50 and that moving average pocket mark. Mark, you mentioned earlier that scares you as much as any technical situation. Is that because of your study of moving averages? Like when you get below the 50, you're just like,
it does. And I'm actually working on a moving average course that I put about 12 hours into this weekend. That will be released hopefully sometime this year. And I call them moving average pockets. And basically what that term means is it's just a significant distance between one major moving average and another. And just some of the case examples that you see of the price movement. What scares me about it is not that the moving average pocket fills, it's the rate in which it fills. Because it just can happen so fast. And the basic concept of it is a lot like Matt was talking late last week about, hey, you have such downward price movement because there's no support levels. And really, when you get a big moving average pocket, you might have some precarious support levels, but nothing that's like tried true. Oftentimes it's just there can be a lot of volatility in these situations.
Yeah. Let's work through the commodities, come back to individual stocks. We do have some companies in the news I want to hit. Matt, let's go to crude oil next if we can, as we're working through our daily routine here on the halftime show. Crude light, guys. I mean, it was boring there for a very long time. It is not boring today. I will tell you that. After that little congestion and that moving average, kind of consolidation came together, we broke down on, I believe it was Thursday originally, but then Friday continued. And then here we are today down 6-7%. Marky, what is going on with crude oil here?
All right, this was the catalyst, right? Now we had spooky market action last week as the broad markets were selling off and oil held on Thursday in the midst of the volatility, but gave out on Friday. Not uncommon for oil to sell off big when everything's selling off, right? If everything's a sell day, oil usually gets taken down with that 9 out of 10 times. But then coming into today, the oil market hasn't had a real catalyst in months, like positive, negative, a little, but it had a real catalyst coming into today. The oil market hates, and it's one of the worst things you can have in the oil market when Saudi Arabia cuts prices. When they cut prices, this is never a good thing. You remember the negative, and this isn't even close to where we were in March, but one of the things that helped exacerbate is when we had that oil war and Saudi Arabia was cutting prices. Well, the kingdom cut prices for October oil, and what kind of created a 1-2 punch is that Saudi Arabia cuts prices, but then China, which is a huge, massive oil buyer and a big player in the oil market in pushing price one way or another, said that only 4 of the 10 refiners surveyed by Bloomberg would be buying more Saudi Arabian crude oil even after the price cut. Because what China has done often along the way in 2020 is at lower prices, they've stockpiled. They're like boomerang trading it almost like, hey, lower prices. Hey, we're going to need lots of oil in the future. Let's take advantage of this and stockpile it. Not as robust demand. And so that lack of Chinese demand coupled with the Saudi Arabia oil prices is giving us a first real catalyst we've had in several months. Now, this is not similar to the situation that we had in February and March, where we had production levels at massive levels, and then we had the complete shutdown of the economy, and then we had storage issues, which just created a perfect storm for negative oil prices that we may never see again in our lifetime. Probably won't, to be honest. But it is concerning on short-term price situation. The technical chart was ugly heading into the weekend. the coaches at Tackle Trading downgraded oil into the negative territory on their rankings. And then you start the week with this negative catalyst. It's just a perfect storm for short-term downward prices. And like in a lot of other areas of the market, we don't have a real concrete support level that we can point to and say, yep, at $32, there's this multi-week support that formed. We don't have that. So this is a guessing game right now. If oil goes significantly lower, I'm interested. But man, I don't got a technical level I can even guess on right
Well,
now.
Mark, I mean, to go on that point, oil doesn't have a lot of history in the last 20 years in these types of price ranges.
Mhm.
You know, back in the 1990s, yeah, oil between 20 and 30, even 15 was normal, right? But that was also back in the day when all of us really enjoyed paying 79 cents for a gallon of gasoline or 90 cents if you're in California. So no, there's just not a lot of history there, but dating back a couple years, you do have a very, very, very significant run right there between 27 and 30. And
Mhm.
so if you remember, that's ultimately where we found that support level when oil was crushing and crashing due to the oil war that Saudi Arabia was doing to the international fracking community, where they were trying to bankrupt the frackers. And so that's ultimately where we saw that price range was right there between 27 and 30. And so with the breakdown of 40, yeah, you're sitting on the weekly 20-day moving average, but again, that's just a hypothetical scenario right now. You're really seeing this as something. There's no buying here. Can we all agree with that, guys? Nobody's buying oil.
Not
Nobody.
today,
No.
Yeah. Okay.
And
So there's
probably not tomorrow, and probably not on the rest of the week. Right?
the amount of things that would have to transpire for me to recommend oil as a buy is at least a couple weeks out. Okay, and that's best case scenario.
Yeah.
So in terms of that, we had a very lengthy discussion in the scouting report meeting on Friday on the entire marketplace. Obviously, it was the majority of our time spent, and it was like a 4-hour marathon, but it was on the market and really breaking down the indexes and breaking down the sectors and breaking down the individual components. And I just think it's really important in these moments in time to be very, very, very clear and accurate. And we had a very lengthy discussion on crude oil. And we've had crude oil ranked into the negative 40 to positive 40 for like seemingly forever, even though it's probably only been a couple months. But it just feels like we've had some degree of neutral for a long time now. And in our meeting on Friday, there was a very, very thorough discussion. And I think a lot of it was, we're so used to oil, right, doing hardly nothing. That was like, okay, let's put it at negative 40. Well, we ended up actually putting it into the bearish territory, and I believe we categorized it right there at negative 35. And kind of the tie-breaking scenario for me was that close underneath 40. I think that close, and I talked about this in the halftime report on Friday as well, that the market in crude has been stagnant between 40 and 44. With the market not buying up at all on Friday, a no buy day, and it closing underneath 40 on increasing volume was quite significant to me. And because maybe the market was thinking about the weekend, the 3-day weekend, or maybe there was some information out there that we don't know about Saudi Arabia cutting oil prices on their sell to Asian economies.
Oh man, I didn't even think about that,
Right.
but that makes so much sense that like insiders knew what they were going to do over the weekend.
Yeah.
And they started unloading contracts on Friday. That makes so much sense.
So that closed when there was no buying activity coming into the weekend, and it closed underneath 40. I just felt very strongly that we had to reflect that in the newsletter and ensure that we had a negative rating because the close under 40 to me was significant. And now we're looking at this on an increasing volume day, volatility to the downside. Where is that support level going to form? You have a short-term one right here at $35. So you have an old resistance right there at 35, new support right there at 35, but those support levels were also coincided with moving averages as well. So that they 35 certainly can act as a support level here, but I'm honestly, look, I think the volatility is going to continue here. Anything can happen in the future, no doubt about that. But anybody buying this, I can't even say good luck to them because this is increasing volatility to the downside. And guys, this is not the first time Saudi Arabia has lowered price against the spot price. They also lowered against the spot price back before oil went to negative. And no, I am not calling negative prices here, but that did see a sell-off after they went to I believe they went to like $8 a barrel at one point before it went to negative. So they were $6 underneath spot price. They're now a few dollars underneath spot price here selling to Asian communities. Last time that sparked a fairly significant sell-off. There's no support here. There's not a lot of positive economic news to support oil prices here. I think we're going to test that $30, $27 to $30 has some major historical significance. And I think that's the next level of support that crude oils is going to kind of be testing.
Yeah, I mean, and there is a principle at play here, and it applies to not only oil, but applies to the broad markets and many Tesla and all of that. And most of you out there will have probably heard this phrase before, but not everybody. And there is a concept, and it is a philosophical and it is a religious concept all rolled into one, that you do not catch a falling knife. That phrase, do not catch a falling knife. And anyone that's been around trading has heard it 1,000, 2,000, maybe 5,000 times because of its important and the principle it drives home. So often as a novice mindset is you see cheaper prices and you're like, let me buy because it's cheaper. Like, hey, Tesla was 500, now it's 350. Let me buy because it's cheaper. And while that on a level in certain circumstances is a great idea, it is only a great idea if you get technical confirmation.
Yeah.
And when something is falling down, like if I blindly go in, I don't have anything backing me up other than blind hope or blind faith. And guess what? Algos are a bunch of hedonistic, atheist, no faith entities. And you see it. I mean, this is not just like 2020. This is 2019 and every year since trading began. That there are situations when momentum gets going, man, that stuff can go fast and furious and you don't know where it ends up. So we never, ever, unless you are the most reckless among us, which we don't want any of our team tackle members to be, you just don't go out and buy on nasty situations just because price is cheaper. You give up the possibility that things just miraculously stop and go straight back up. You give that up for a little bit of confirmation. So give up like, hey, well, what if, I mean, this is the thing that kills so many traders. Well, what if it stops here and goes back up to 42 immediately? Hey, you miss out on that. That's the trade-off.
Who cares? Listen, sadist, who cares? Right. But Mark, two things. Number one, there are different types of knives. Right, you got a pocket knife and you got the big knives, right? Crude oil, you'd be like trying to catch Rambo's knife here.
Yeah, I know. I mean,
see, that's a Maddism. Let me clarify.
That's a Maddism.
That's a Maddism.
See, I tried on that one.
We need to make a book of these. There's no question.
Now, is he talking about the Jack Hawk 5000 that Will Ferrell had?
I knew damn well you would know exactly the knife I was talking about. You probably have the product ID number memorized. But yeah, that's Rambo's knife right there. So but I fully agree with you, Mark. You got to remove the hope and the wants and the wishes from trading, because this market is apolitical. It is everything. It doesn't care.
Everything.
It is everything. It doesn't care about your little wants and wishes and desires.
How's it going, eh?
Say everything.
Hold on, I'm making a list. I gotta write these down.
Listen, these lists have been made in the past, and you guys can't keep up with the list.
I'll have to call old Bull Moody and combine our list.
Listen, you got to listen. When you have taught as many people as I have, you got to find creative ways to introduce new subject matters to people. For number one, for your own sanity, and number two, to help them understand it in their language. Because when you're teaching people of Dallas, Texas, I can promise you the analogies I give are a little different than when I'm sitting in Manhattan.
Mm-hmm. Does the Rambo analogy work in both?
Oh, it works in Texas every time.
It works in Texas. Yeah, it would work in Canada as well.
People in Manhattan are like, why do you
Who's
need a Rambo knife?
That's right.
I'm like,
That's
have
right.
you ever held a Rambo knife?
Why do
That's
you need a
why
Rambo
need
knife?
Rambo
Well,
knife.
it doesn't matter why you need it. You want it and you have it because you can.
If you've never held a Rambo knife, that's why you need it.
Yeah, yeah.
And
Yeah,
who
you
needs a
hold one
Rambo
of those
knife when you got a machete?
It sparks, and you're like, I want this. I need this in my life.
I bought a Rambo knife when I was 12, and my mother stole it from me. And
I
then
remember.
she did that twice, my Rambo knife and my 22. Both times she stole them and had my friend hide them from me.
Smart woman. I like it.
Yeah.
Let's keep working through the markets one at a time. Gold, silver,
Yeah.
the dollar, Matt. Even take a quick peek at Bitcoin if you can. Let's just flash through them.
Ah, man, in a world of craziness, gold holds support. Moving on.
Well, you got to love this though, right? I mean, we've been talking about it for months, obviously. I mean, you got to love the fact that it's holding support even in the face of market volatility. Are we concerned about a potential margin call or a risk off on gold? Sure, but the market will tell us. If support fails, we'll know, and it will break down. We'll have a different analysis, but I like it here. I mean, Greg.
Does anybody else wake up and look at their portfolio every now and then and are just like, you know what? Thank you, gold, for being the less crazy
Stable.
person in my portfolio.
Absolutely.
Thank you for being the person I chose to marry. You were marriage material.
Absolutely.
Sure makes those bull put spreads on gold look awfully nice, doesn't it?
I love the fact, this is just additional confirmation, Tim. The last 3 days have been pretty nasty for the marketplace. And what's gold done? Doji sitting at support. You got to love it. Obviously, it really doesn't change the analysis as long as 19 by 1920 holds.
Yeah, no, and even if 1900 does not hold, by the way, I'll just be more interested if it comes all the way down to 1800. So, obviously there's so many different scenarios that can play itself out. For now, I love it, and you're right though, Matt. This is the girl you bring home to mom, Greg, the one that you marry, right? More stable.
Oh,
You marry.
Listen, you date silver, you marry gold. That's how it works.
That's right.
What do you do with Kodak?
Mark, Kodak is a swipe left that you accidentally swiped right on.
Listen, I like to see
you
a
were
little
drunk
Kodak
one night, and you're like, okay, that works. You swiped right. You would never do it if you were. No, that's Kodak.
Yeah.
Should have swiped. Am I getting my swipe left right?
There's a picture joke.
You are.
Okay, I didn't know.
But yeah.
Listen, I like to see Kodak on the side. So
I'll tell you what you won't see is me analyzing Kodak. It's not coming on the chart.
We're not bringing up Kodak today. Let's keep working through though. Take a peek at the dollar here, Matt. Little rally into resistance. Actually, the momentum though, you have to admit, has changed just a little bit here. Any technician would. You back above some short-term moving averages. Are you a little bit more neutral than short-term, Matt? Or are you still slightly bearish? I mean, anywhere.
If you want to know my analysis on the dollar, all you got to do is look at the ranking in the Forex report and in the newsletter every single week. I put it at -40 for a reason. I upgraded it to -40. I think you got to be some degree of neutral right now. The failed breakout from last week, and not only that, but the two failed breakouts in the last couple weeks. I mean, this was screaming that it was getting gobbled up at the lows. Every time it broke down, it came right back up. And so I think you got to look at it from some degree of neutral perspective. I still had the slight edge to the bear, but based on what I'm seeing today, I think you would park it at the 50-yard line and just call it good for the next week.
Yeah. Bitcoin real quick. I know we talked about it a lot last week with the podcast last Monday. This Monday's podcast was on chart gapping and whatnot.
Hey, who yelled at me in the chat last week when I said Bitcoin at 10,000? Who yelled at me? Somebody yelled at me. I can't remember who it was.
I can't remember who it was. I think it was a Matt, one of our team tackle members. They're like, oh no, 12
scoreboarding.
Yeah.
Stop scoreboarding.
I heard it too, Cody.
There's no scoreboarding there.
Yeah.
Really?
I'm just saying, I see the 50-day moving average, and because Bitcoin doesn't care about the 50-day moving average, I don't care about the 50-day moving average.
Bitcoin doesn't care about daily charts.
I do care about 10,000.
I do care about 10,000 too.
Yeah.
I was thinking the same thing. And we have a violent test, right? We came down to it on Friday. We came back down to it today. Listen, the best thing, if you're invested in Bitcoin or any instrument, you would really like to see some volatility die out here. Small trading ranges this week. As we just oscillate between 10 and 11,000 or somewhere like that.
The first
That's
step
like
in slowing momentum. The first step in slowing momentum is always from an intraday perspective. If you ever get your slowing momentum on the daily, it's because it was preceded from slowing momentum on your intraday perspective. And so this violent sell-off we've seen in Bitcoin over the course of the last few days. Tim, can we finally put to bed Bitcoin and gold argument?
I'm happy to put it to bed.
Can we
But
put it
bury
to
it in the
bed?
backyard?
Can
Absolutely.
we bury it?
Bury it in the backyard.
Done?
It's done. It's
It's
dead.
done. It's
Yeah.
over. Okay, good. Now, in terms of this now from a technical perspective, you're starting to see some things form on an intraday perspective that are very, very positive and what you need to see for a buying opportunity to exist here. First and foremost, you had a very consistent 30-minute trend line coming down, 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 down. It finally broke through that on the overnight action yesterday.
Mm-hmm.
It then retested those that double bottom right there at that 10,000. Now it's 9,900, but it's Bitcoin, so that's all 10,000, right? So in terms of that, it double bottoms right there, that 10,000. Now you're breaking up back up above that that trend line you had. You had the double bottom. Now you're fighting for confirmation. And so from a confirmation intraday perspective, what you want to see is you either want to see it stagnate like this, followed by another day of slowing momentum. That's what you want to see. Now for Bitcoin holders, they would just love a pure buy the dip, goes back up 20%. I'm talking about entry points here. So from a 10,000 support level, which we can all agree is a very significant support level for Bitcoin, you got what you want initially. You got the double bottom at 10,000. You're still clinging to lower highs though, lower highs on the intraday. You need to see it get back above 10,400 from a confirmation. I think the best trade here though is if we get another day of consolidation, because what that would do is that would give this daily chart a nice little doji right there. That's what I'm looking for. A nice little doji right there. So support right there at 10K. It's an easy trade at that point. You get it above the intraday resistance level. You get a stop loss under 9,900. You wait for that confirmation after slowing momentum. So initially, you're seeing the slowing momentum on the intraday perspective. Now we got to see it on the daily chart.
Mm-hmm. Yeah. Yeah. I agree with all those on the technical perspective, and 10K is significantly important. Any Bitcoin trader knows that. It was significant when it broke out in the past. And it's going to be significant here. Let's get into individual company news here, Matt. There's a couple that I want to get to. We already talked about Tesla. There were some stocks that got added to the S&P 500, those CTLT, Etsy, and TER. The one that actually grabbed my attention is probably an Etsy here. Had a really, really good run there from the bottom.
I want to get you guys' take on something.
Yep.
So Mark came over to my house this morning to pick up my little girl to take her to school.
Mm-hmm.
And school is at Tim's house. Tim's wife is literally a saint that's going to be exalted and brought straight up to heaven for taking on the challenge of, handling online school for me, Mark, you, and just she is an absolute saint. So Mark's coming over. It's his week to pick up the girls and take the girls over to your house. And Mark says, "Did you see the news on Tesla?" I'm like, "Yeah, it's. What do you think it is?" And we widely speculated the same way everybody else widely speculated today. And he says, "You know what? What's funny is they added Etsy instead." And my wife says, "Hey, I like Etsy." And Mark's like, "I'm not saying anything bad about Etsy." My wife was on a little edge this morning. It was funny. But what's your take here, guys?
Listen, I mean, it's rampant speculation. I feel like I'm entering the who is the bigger superhero, Batman or Superman argument. Listen, the fundamentals of Tesla, the valuation of Tesla is absurd. It's absolutely absurd. And I think that played a role in the decision. Not that Tesla doesn't make good cars or this or that, but my best guess is you're on the S&P board. And unless someone really just hates Elon, which I don't think, they just looked and like, man, this valuation's too high. We can always add it next quarter. We can add it the quarter after. We can add it 2021. It's probably eventually getting in. But let's see this craziness ebb down first.
Can I say something to that, Mark?
Mm-hmm.
Nobody knows why the S&P did not add Tesla.
We don't know. That's just my guess.
I can only go based on when I'm adding stocks to the Tackle 25 because that's my experience. And I had Tesla on the Tackle 25 for multiple years. I removed Tesla from the Tackle 25 because of valuation fundamental concerns. not because I didn't like the company, not because I was out on Elon Musk, but because I had concerns about fundamental valuation. And even though there's some subjective analysis that goes into the Tackle 25, because you got to cross compare against current market conditions, I just didn't feel comfortable adding that high of a valuation to a fundamental cash flow type environment, even though I was a fan of Tesla at the time. And so I could see, individuals, now that Tesla's met the requirements to be included into the S&P, I could see the S&P saying, you know what, it's a company we like, but do we really want to put it into the index at these current valuations? And I think that is an absolute reasonable approach to take on Tesla. Now, Tesla fans and Tesla bulls are not going to be happy with that decision because it obviously had an impact on the price performance today. And it's almost like being included into the S&P is a little bit of a, hey, welcome to the big boy club. You're you're a real boy now, right? You're a real company now. And they've had to deal with, this fake company analysis for years and years and years. So I do understand and appreciate their concern today, but I also would, I would make the same decision the S&P did, guys. I would.
Mm-hmm. I don't have any problem with
Now,
this.
it might not have been Teradyne, Etsy, and Catalent that I chose, but I do understand the Tesla concern.
No, I have no problem with the decision, and I would be very curious. I don't know if they even make the announcement at public as to why they do what they do. I'm not certain on that.
If I was them, I would not say a word.
I probably wouldn't say anything either. Yeah. But Etsy here, I mean, obviously it's had a tremendous run. It's not like this is a good value company, guys. I mean, we're talking about, a new startup that basically they do what, $800 million in sales a year and worth $12 billion. So it's not like the fundamentals here are exactly cheap.
No, they're not. They're range up too, obviously, but there is a fairly significant difference between 100 PE ratio and a 1,000 PE ratio. There is a difference in those two.
Mm-hmm.
I mean, I just think at the end of the day, whatever the reasons are, it's a reality check for people that have been trading 6 weeks that have been like Tesla to $8,000 just because they like the brand name.
Mm-hmm. Mm-hmm. No, they're getting the reality check whether they want it or not here, Mark. Tesla's obviously sharply off their highs, down about 25% from tip to tip. Other companies grabbing my attention here in the news here today, guys. Nikola and GM, from one, electric car company to another one. Nikola here obviously making a very, very big splash. I mean, this company has been, criticized a lot in the last few months because there's not any revenue. They haven't made any sales yet, all that kind of stuff. Matt, this is a big deal for Nikola, in my personal opinion. They went into a partnership with GM. GM took an 11% stake, and they're going to obviously give that ability to get that, what is it, a Badger, I think is the truck that they're creating out there into the marketplace at some point. I know, Greg, you're not a big GM fan up there in that area of the world. I know you probably have some strong opinions on this, but Matt, for Nikola first, then we'll get the GM analysis. I mean, what was your reaction to Nikola's news?
I got a couple reactions. Number one, that Badger looks tough.
I think it's a
It kind of does, doesn't it?
It looks tough.
Even the name Badger, like that's
It looks tough.
I mean, they
Look
still
at
haven't
that.
made a sell, but it looks
Look at
tough.
that
It's
thing.
got a good brand name.
Look
you
at
know.
that. So,
Badgers.
look at that. Look at that.
Badgers. We don't
me-
need no stinking Badgers.
Okay, old money. I know I could see you're going to be going through a midlife crisis at some point soon. I could see you in this truck.
I'd run that truck over with my Ford already, but yeah, no, that's okay. It's a good looking
you
truck.
can
I'll
say
give you
it 'cause
that.
GM
I'll give you
bought
that.
it.
I'll give you that.
Now it's a GM truck, and Greg's going, oh no, it's terrible. I love it. I love the truck. Public service announcement to GM. Don't mess this one up.
Mm-hmm. Yeah,
Just a
weren't
PSA.
they on the fringe of bankruptcy 20 minutes ago or something like that? And now they're buying other truck companies.
Well,
Listen, that's how. Welcome to the world of the stock market. It doesn't matter how much money you have when you can just borrow your investors' money.
Yeah.
But I love I love this for Nikola, and I love it for GM. I think it's a wise investment in GM to try to, update their brand image a little bit. they've had some failure in this arena. And so finally they said, maybe we're not good enough and we're just going to do what every other great company does and acquire new tech, right? So I think this is an amazing deal for Nikola and GM. I think it's one of those deals that is a win-win for both companies in the long term. Short term, obviously, the market is celebrating it. Nikola is not my cup of tea to trade. I don't like the random volatility of it, but I do think it's positive for the companies moving forward. I think it's a good deal for both sides.
And them taking, 11% stake, I think it provides, because Nicola's obviously been a wild child, right? And it's not that it's not going to continue to be a wild child. You're going to probably see really big, huge back and forth movement. But I think GM taking a stake in Nikola brings some stability and put some kind of floor in at Nikola at some point. I don't know where that floor is, but I thought it was fascinating. I mean, so often we get news stories that don't really mean anything. They'll jack Peloton had one today that jacked it up 10%. I mean, and they don't really mean anything.
Yeah.
This, like when I heard it, because I didn't see it when I was going through my routine, I didn't see it. When Tim verbally told me, I was like, wow, that is actually a 11%
That's a good deal.
stake. It really hit me as like, wow, that actually means something.
Well, and they're both Nikola and GM. They both have seats on each other's boards in this deal as well. So this is a true deal, not one of those fake deals we see.
Yeah, I mean, because I've actually spent a little bit of time on Nikola analyzing it and messed around with it a little bit, trading here and there. And I mean, one of the big things in Nikola, I mean, it's the infrastructure, right? I mean, when you're like a Toyota or even a Tesla as they're building out, I mean, it is not a cheap endeavor to build the infrastructure necessary to produce a large amount of automobiles. And one of the knocks on Nikola, besides they didn't have that. And to have not only an 11% stake, but the expertise in manufacturing, in assembly, I mean, it's a huge deal for Nikola. It's a huge.
I think it is. I think it's a good deal for both companies, honestly.
Yeah.
And it's a deal I would make with both companies. I could see the logic behind both sides of the deal. It goes to my belief in negotiations and deal making in the first place. You want to create long-term stability in these types of deals, and I think Nikola gets what they're looking for in long-term stability. They get a marketing arm to kind of market their vehicles. GM gets that, try to update their image, get a fresh new image out there. GM's tried to get into this space and has failed to get into this space. Obviously, this is GM saying, I want to go out there and compete with the BMWs. I want to go compete with the Teslas. I want to go compete in that arena. And GM, right or wrong, has the Ford mentality to it. Old, stable, dividend payers, value companies. And this feels like, to me at least, and I'm not saying this, I'm just using this as a cross comparison, but it feels like when Microsoft, made that very important decision 10 years ago to start moving into cloud-based systems and start focusing not only on the sustainability of their value areas of their company, but get us some of those aggressive areas, get us some of those growth areas as well. GM, a stable dividend, covered call type candidate, which has struggled in comparison to the market for years and years and years and years, where the market, it was up 450% in the last 10 years. GM's done what? It's done absolutely nothing. It's had that Microsoft decade where Microsoft had their decade of nothingness. Microsoft moves into cloud-based systems, starts focusing on the growth areas of the market. GM now, focusing on a little bit more of the growth area of their company. I think it's a wonderful deal for GM. I do want to answer Paul's question, though. Paul says GM or Nikola here. I think it's positive for both, Paul. I'm going to throw it to the coaches. Short-term trade, okay? And both would be momentum-based, but short-term trade, GM or Nikola.
Well, I took action on one of the other and not the other. I sold naked put on Nikola this morning, so down low October's. So that's what I did, because I really do think this provides some stability. Now, the fundamentals, well, they don't have fundamentals because they haven't sold anything, right? But so I took action on Nikola this morning.
I like the momentum of Nikola here. It tried before the cash opened to sell off a little bit. it got gobbled up at the cash open, guys, and just pushed it right to that breakout channel right there at the high of the intraday last night when the news came out. And now you're clinging on to that 54. I like the momentum above 54 here. I do, and I think you're going to have to put a stop loss most likely under 48 here. You got a little bit of support levels. You got an intraday support right there at 45 as well. So you're going to have to take some risk here.
Yeah.
But I do like the momentum above 54 with the momentum style trading. Your target, you do have a target short term at 60, but upwards of that, you're looking at somewhere around 75. When you're looking at,
I like. I was gonna say, yeah.
Yeah.
I think Nicola's just fine. There's nothing wrong with it. The momentum's there. The way Mark played it is great. And Matt, going down to an intraday chart, you can map out reward to risk that's favorable. But I think you got cheaper risk here, Matt, in that regard.
you do have cheaper risk, no doubt.
Yeah.
No doubt. When you're looking at the risk, like I said on Nicola, because of the volatility and the speed of the movement, you're going to have to take on a little bit more risk, underneath that 48 or 45 level, most likely. I could understand somebody putting a stop loss under $50. It's a significant whole number, but there's not a lot of historical evidence of how Nicola handles $50.
Mm-hmm.
So I'm looking really more of that 48 intraday base that you had, or the 45 daily low. On GM here, obviously not as volatile of a play here. You got the breakout channel right there at about 31.10. That's also coincides with the low of today. So on the breakout here that you saw out of the base, a little bit of a neutral breakout there, dropping this back down into that 30-minute chart, it got gobbled up at the cash open as well. It got a little bit of a short-term retracement here, but you can put a stop loss pretty clearly right there underneath that 31.10 level. You're taking about $1 of risk versus about $5 to $6 of risk on Nicola. So you don't have the upward potential on GM, obviously, that goes without saying, as you do on Nicola. You have a lot more momentum on Nicola, but you do have cheaper risk on Nicola. You would be targeting on that breakout of 33.30 there. You would be targeting somewhere around the 35 to 35.60 level. So you probably have a little bit better of an overall return to risk ratio. But if you're looking to the home run, you're looking at Nicola here, but you are taking more risk there.
Yeah. Yeah. Interesting news on both. And I love the way that this deal went down. It's benefiting both parties. Obviously the market likes both responses. That's a good deal, Matt, when it does benefit both companies and everybody sees
I think it's a good deal.
Yeah, definitely a good deal. Another one I want to talk about here, Beyond Meat. Mark, you brought this one up in pre-production. They actually have some announcement where they were putting some production or facility in Shanghai, I believe. The market is liking it in the short term.
Yeah, I mean, they made a deal with a Chinese-owned to design and develop manufacturing facilities near the business hub of Shanghai. And it's just like this crazy. I mean, I know this is weird, and there's no way to quantify it, and I don't have any data. But when I see Beyond Meat up 8% and the market's down, I'm like, there's not fear in this marketplace. This is still algo driven. And just like the algos can drive up, drive down. I mean, for me, my gut says this is a technical sell-off. And as soon as support forms and as soon as you get a reversal signal, you're going to have a big day. I mean, so it's weird, but that's my gut.
To go on that, I think your gut is speaking to you right now, Mark, because I mean, the reality is, like we broke down last week, there was no major news that sparked this sell-off. There was no major, it wasn't like, oh my goodness, we were going to get a fiscal deal, now we're not getting a fiscal deal, right? Oh my goodness, we were going to get the Fed doing this, but now we're not getting this. Or, oh my goodness, we were expecting the economic report like this, but we got it like this. No, we haven't not had any major news from a geopolitical situation. Yeah, Trump was railing on China. Can somebody remind me the last time Trump didn't rail on China?
Yeah, I mean, come on, this has literally been rhetoric for years. So
since 18, this has been rhetoric. So yeah, there was no major catalyst out there. And like I said, like we broke down last week, as you're going up and up, and you don't create a lot of significant support levels, once those intraday support levels finally are broken, that happened last week, you see this type of volatility. And until the market finds that support level that we've been talking about literally for days now in the halftime report, you're going to be a little bit cautious.
Mm-hmm. Yeah, I think you got to approach it with caution. Greg, on a day like today where we're talking about hydrogen electric trucks and Beyond Meat burgers, Old Money Homes is probably like, what in the world is
I
happening?
am drinking a beer and going to get in my truck right now, and I'm going to be playing with my Rambo knives.
We've had enough internal meetings to know Greg's opinion on Beyond Meat. It's not a favorable one, I'm guessing.
I'm eating a burger with you today, Greg.
I'm all about
Yeah,
it.
you know what? I'm always the real deal, and Beyond Meat just is it's as phony as mainstream media as far as I'm concerned. So, not really interested in it. Don't get me wrong, I'll swing trade anything, but yeah, I can't buy into the chemical space. So, if I want chemicals, I'll go to Allied or something. I don't know.
I can't buy into the chemical space.
Yeah.
You know,
So,
we need to have Greg
see...
on more often, because I have to usually play the role of the snarky pessimist. This is all crap. Greg, you play it to a T. It's in your DNA there,
I want to correct my buddy Matt Justice there. GM is no longer a dividend payer, my friend. They cut their dividends.
They did cut it. They did cut it. They did cut it.
Yeah.
Any shot you can take on GM, you don't miss the beat. I love it.
Hey, you know what? You guys started talking about companies, and every one you're talking about today, I'm firing it into my dividend machine to see what they're doing. And I'll be honest with you, there haven't been a lot of good candidates yet today. So
hey, listen, where are your robust auto manufacturing facilities up in Canada?
Mr. Trump was kind enough to take them all away and send them to Michigan. So hey, don't get me wrong. Our guy allowed that to happen. So we'll let that go for now.
Oh, that was funny. That was funny. Hey, Dividend King, Greg, with the significant drop we've seen in crude oil, the first thing that I thought about from a dividend perspective was ExxonMobil.
Yeah, it's a hot topic today, and a hot topic in the circles that I run in anyway. There's fear right now. There's fear that, especially with oil getting beat up as much as it is, that ExxonMobil may cut their dividend, and it wouldn't be unheard of. Their dividend payout ratio is like 207% now. Anybody who's looked at the fundamentals.
Can you take a moment real quick, Greg, and explain what that dividend payout ratio is? Because I'm willing to bet a lot of people don't know what that actually is.
Okay, it's I'm going to simplify it as I do everything else. The dividend payout ratio is basically a percentage of earnings that they use to pay out the dividend. So if you're over 100%, it means they're using all their earnings to pay out the dividend. Now, for a company like ExxonMobil, if you look at their financials or their fundamentals, they've got some cash behind them. There's no question about that. But with the numbers of facilities that they run and the employees that they have and all that stuff, cash can only last so long. And when your dividend payout ratio is over 200%, you've got to start dipping in that cash to keep your shareholders happy. And so that can go on for a little while, or what has to change is your earnings have to increase. Well, right now, oil's not looking so good. The price isn't rising. That's not going to bode well for their earnings either. So there is a lot of fear that they'll cut their dividend. Now, they do have a very long history of paying increasing dividends, and that's what makes them attractive. However, if they do cut the dividend, you could see a kind of a GE scenario. Plus, they got the boot from the Dow as well. So all of this stuff makes it a little tenuous at best. I'm watching the price of oil very, very, very closely, and I'll be honest with you, I love ExxonMobil. I don't think they're going anywhere, but they could be in for some short-term pain, which ultimately the shareholders could take part in. So
ultimately, aren't you faced with the scenario of massive layoffs or cutting your dividend? Aren't those discussions being held right now at the highest levels of Exxon?
Well, I've got some boots on the ground when it comes to this particular entity, and the layoffs are already there. Like, they're already happening in certain portions. So they are trying to. You know what? In the time that I've been alive, ExxonMobil's gone through, I want to say 2 or 3 very tough periods. And they've always been very adept at streamlining their business. and they're doing so now to, I think, prevent. I think they want to keep that dividend streak going. I think they really do, but they're also good at trimming their business. Now, the only question that remains, at least for me, is the, how long does the oil business suffer? You guys, we've been talking about electric cars here, right?
Yeah.
I don't personally think oil's dead myself, but it could spend a lot of time in solitude, so to speak. So whether it happens or not, I don't know. But yeah, they have to do something to trim things down. I know that they're doing that right now, but at the end of the day, if they have to cut the dividend, they have to. Now, the good news about that is, a healthy dividend for a solid blue chip company, you only usually look at 3-4%. Their dividend right now is over 8%. So, you know what I mean? That's pretty healthy. Even they cut it by 50%, it's still not a bad company. I guess the outlook that you have to have is fundamentally you got to make sure that the company stays strong. And secondly, I'd be looking to see, if they do cut their dividend, what kind of slashing they're doing and kind of what their rationale behind it is.
So, I mean, if you take a look at ExxonMobil's chart and you overlay it against crude oil, I mean, there's a lot of correlation there, obviously, and I'm not saying anything that anybody doesn't already know, but I mean, Greg, I certainly don't believe that oil's dead in no capacity. I think we'll be consuming oil throughout our entire lifetimes, but I do believe we are entering into a different phase of oil consumption to where you most likely will see the most likely scenario is a deflationary environment as demand, starts to get offset through other, technologies, other, alternative energies. And, obviously, like we talk about with clean tech and the ESG movement, so the average price of oil over the last 10 years has to be north of 50, right? I mean, it has to be. But in the next 10 years, I don't think we will do that. I think you'll probably see the average price of oil more like somewhere into the 40 range than the 50 range. So I do think you are entering into some deflationary environment for oil. But no, I don't believe oil's dead. But if you do enter into that environment in oil, I mean, the growth potential in Exxon without ESG is limited.
Yeah. Well, so the other part of that too is sometimes you got to look a little bit deeper, which I do with the fundamentals on occasion. You look a little bit deeper and you see what, first of all, one of the most important things for me, at least when I'm building a portfolio, is I want to see, I'm a Warren Buffett kind of, fanboy, but I want to see what the management team is like, right? I want to see, can they adapt to the new world as we're seeing in oil here? Like you said, maybe it's a deflationary scenario and maybe they need to adapt. Well, I know, like I said, with the boots on the ground that I've got, I know that they've been divesting their business in at least some capacity for probably the better part of 10 years now, 15 years. And so they're doing other things. I think another little elephant in the room here is the coronavirus. Cutting down on the air travel. I know that, here in Canada anyway, Exxon, or the stepchild of Exxon, they're really big into the jet fuel. Well, everybody and their brother knows that we're not flying near as many planes as we used to, right? So that's also hurt their business. But with this divestment, both upstream and downstream, I think they'll be positioned for the future. But that doesn't mean, as I said before, that they're not going to suffer because of a deflationary scenario, that they're not going to suffer some short-term pain here. And that's going to reflect in their stock price. And as you can see, it's been beaten down pretty good and not had the recovery that the rest of the market has seen. And so really what you got to do, at least in my estimation, is protect yourself to the downside in a scenario where the dividend does get cut. Or maybe you're not even an owner here, and you think about exactly what we've been talking about all day today. Is you wait for things to settle out, confirm to the upside, and then maybe get involved then if you're not already. Because like I said, I think long term, I think Exxon's got a future, but short term, it could be a beatdown. And Mark actually added fuel to the fire here in the fact that Saudi, they're doing their thing as well to cut oil prices and kind of put some pain in there. So it's going to be a rough road, no doubt.
Hey Greg, if you had naked puts on like an Exxon or a Chevron or a refiner, would you roll them down and out?
100%.
I would.
Yeah, 100%.
I would.
No question.
Yeah, I mean,
Yeah,
I
that
think so too.
short-term pain's gonna, that short-term pain, if you're already experiencing it, you're gonna feel it soon enough. It's, you know,
Yeah.
I'm one of these guys that, you know, I do even a little bit more. If I had the naked puts, I might even hedge it with some short stock or something. Like, I don't like to sit there and let the pain, I got kind of a point where I just say, you know what, it's time to get aggressive with the hedging and stop the bleeding. And then, you know, once it turns to the where I believe it should be, then you can uncoil what you've had to do to it. So
Yeah, I'm with him. I'm with Greg on that one, Mark, because when you're, especially for you who looks at certain key levels from both a technical and a fundamental level of ownership is what you're looking at from those naked puts. And so you're assessing the value based on the current information. With what Saudi Arabia did over the weekend, I think you have to update that as a new variable, which means I think you have to lower your price threshold that you're willing to take ownership at.
Hey, man, these markets, they just, they are battling right now, aren't they? I mean, every time you get a little lift, you come back down. I mean, I've been following the cues the whole.
Listen, this is a war. This is a battle. These are battles being played out in real time.
And this is what for the pro members, when we did our weekend prep class for the week, I was like, this could be really good theater this week.
Yeah.
You know, this could be really good theater, and it really is. I mean, this is, you know, and I used the phrase in the show yesterday, there's going to be a true battle between bulls and bears. And it's going to be a true battle. It's not going to be, it's going to be a true battle. And that's exactly how the things are playing out right now. It's fascinating theater.
And again, let me say it for the upteenth time, market assassins, they don't pick a side until they see a clear winner, and then they jump on the bandwagon.
And then they, you know, what does Noah like to say? Noah likes to say, you know, nobody wants to go first, you know, and the cowardly in trading are oftentimes the victorious.
It's true. Listen,
Wait for the heavyweights.
In moments
to
like
fight
this,
it out.
in moments like this is not checkers, this is chess. In moments like this, it's a little bit more complicated. It's a little bit more nuanced.
This is Braveheart. They always send in the heavy horses first, and then the guys go afterwards. So let's send the heavy horses first, right?
Let's send the heavy horses. No. Let's send the heavy horses. We're the archers, Craig.
We sit in the back. Yeah.
Yeah, sit in the back and pick our spots.
Well, intraday resistance did hold. It is selling just a little bit. I do think that's a good analogy, though, on the chess thing, Matt. It is more strategy and all that kind of stuff, and you're going to see some volatility back and forth. Remember, a lot of the volume comes in early in the day and late in the day, and that might give us a lot.
The close is important. The close is very important.
I think so. Let's start getting final thoughts here today on a Tuesday, guys. I think the analysis today was spot on. I think it really helped our community out there. Always appreciated from every one of you coaches and Old Money Homes. It's always great to have you, sir. Let's let you go first. Final thoughts on the market here today. Anything on your mind?
I think Mark said it best. We're in the trenches. We're in a battle right here. Like I said, myself as a trader, you know, it depends on obviously the way you do it, but if you're swing trading, it's okay to sit back, just wait, see how it plays out, and then hop on board. You know what I mean? Like, it's really okay to be, I look back on my trading career thus far, and the one thing I wish I had more of when I was, in my first 3 to 5 years of trading was more patience to wait for the right setup and enter it properly, as opposed to just looking at something and diving into it. I think it would have been better if I had more patience, and that's really what I'm doing today. I'm sitting back and waiting for that beautiful, setup play to jump in with the confirmation and wait for the springboard.
And Marky, I got a question for you before I get your final thoughts. Is that a CEI beanie that you are wearing right now?
This is
Carbon Emery?
This is a Carbon Emery insurance beanie
I
that
saw
I am
that.
wearing. So
the Tackle Trading Halftime Report brought to you by Carbon Emery Insurance. If for all your insurance needs, go to Carbon Emery.
Our family comes from a long line of entrepreneurs, small business people. And our father and our mother opened up a little independent insurance agency 40 years ago that is still run by the family. Its name is Carbon Emery Insurance, and this is their beanie.
Very
Yeah,
cool.
we're the only three that got kicked out of the family business.
It's true.
Nice.
Well, Jenny didn't participate. She went into education. But Marky, final thoughts from you.
Listen, we don't, like Matt was just saying, oh my gosh, did you see the windstorm outside here in Utah?
Dude, it was
Oh,
crazy.
The weather here is
I mean, I got distracted because
nasty.
my tree, because I sit at my table in my little kitchen, and I got distracted for a second because my tree literally bent over halfway and snapped back
It's
because the
nasty
wind was
weather
so
here.
strong.
Yeah.
So listen, like a windstorm outside, this market is really, really volatile right now. Like Matt said a second ago, you don't know who's going to win the short-term battle. What you as a trader can do is create two plans. Bulls win. What are you going to do? What are the signals you're going to look for? And if things spin out of control a little bit more, what is your plan on that side? Like having two in this kind of crazy back, because you don't know. I mean, the S&P could be at 3,500 tomorrow, and it could be at 3,250 tomorrow. We don't have any idea right now with the lack of real strong resistance and support on both sides. What's your plan? That's the most important thing.
I think even bullish traders would take a 33.60 tomorrow, Matt, and a doji. I don't think there's anything wrong with that. And you're right, though, Mark.
Are you kidding me? It's
They would
almost
take-
like you listened to me breaking down the technicals earlier today.
That's right. I think bullish traders would love a little doji.
Yeah.
Maddie, final thoughts?
Hold on. I got two final thoughts. The first one, and as I go through the first one, I'm trying to think about the second one.
Mhm.
But Tim, did Mark just cut out? Did his audio just cut out?
Not for me, no.
Oh my goodness. Mark was paying me a compliment and his audio cut out for me. It was like
I've been paying you a reasonable percentage of compliments lately, so
Yeah.
whatever.
Yeah.
I'm just saying, like the gods took that away from my joy today. But no, I like I said, the message today is very clear, guys. You got to see this as a buying opportunity, but it has to be confirmed by the marketplace. And you know, I wanted to spend a lot of time breaking down technical charts today, and I really do hope that helped Team Tackle out by really understanding what it would take to form those support levels, breaking it down from an intraday perspective. You know, we did it on a lot of stocks here today. But this is where, you know, traders live, these moments in time. And it's about showing up, doing your job, you know, navigating the market on a daily basis, and stick with us in the halftime report all week long, guys, as we break down when these support levels are forming. We're gonna look at this from a technical perspective all week long. And so hang out with us all week long, guys. We're going to be breaking down this every day this week.
Yeah, it's going to be a fun week. I think there will be a lot of action to analyze one way or the other. So come back and join us each and every day. If you're a veteran, as always, we appreciate you guys. # Team Tackle. If you're new to our channel and you want to come back, just click subscribe, click the bell. You'll get an alert from Google each and every day whenever we go live. And whenever the markets are open, we are live at 12:30 Eastern. Matt is bringing up the podcast website. And we did drop a podcast last night with Coach Tyler. Matt, really enjoyed the conversation with Tyler. He's always enjoyable to sit and talk to, quite frankly. He wrote an incredible newsletter. And talk a little bit about that podcast, Matt. What'd you think? I know you put it out there last night. So.
Well, we need to get the link on the website so the website works. So let's make sure we get that up and running. But no, we did drop a new podcast yesterday. And so anytime, obviously, you guys know we drop our podcasts on Mondays. Definitely download, check it out. But, you know, Tyler wrote a wonderful newsletter on trading gaps this month for the Trading Justice podcast. And I thought it was a wonderful, wonderful written newsletter. And we wanted to bring Tyler on to kind of detail that newsletter a little bit. Understanding the anatomy of a gap is very, very important. And they don't just happen in earnings, they happen in positive news, negative news. And the understanding the different types of gaps can really help you understand if, you know, the exhaustion gaps versus runaway gap scenarios, looking at it from a, you know, overnight action versus a cash open perspective. You know, any veteran of the halftime report knows how we break down gaps during earnings season all the time. But for those of you who are very, very new to gaps and technical analysis, I think that both the podcast from a mindset of a gap perspective, and then Tyler writing that newsletter could be very, very helpful in understanding the anatomy of a gap. So definitely give the podcast a listen this week. And obviously we love when Tyler comes on and shares his infinite wisdom from a technical perspective. So everybody loves Tyler. Let's give Tyler a listen to this week. And then obviously, you know, check out the newsletter as well.
Absolutely. All right, guys, we are out for today. We'll be back tomorrow, same time, same station, breaking things down. And as always, there's a coaches show tonight, 8:30 p.m. Eastern as well. Mark, who's on the coach show tonight?
We have a topic and we have coaches, Noah and Greg Holmes. And I don't know if Noah will be there. I don't know if you saw in our internal Slack feed.
He did send a message that is.
He showed a picture. His parents live a couple blocks in a tree. I mean, the wind here in Utah, in Salt Lake, is really bad today.
Nasty.
And a tree had toppled and fallen on the house. So hopefully Noah and Greg, but Greg, you have a topic. You and I were talking about a topic yesterday. What are you going to talk about tonight on the coaches show?
Well, we're going to talk about expectations. So, we talked a while back there about small account sizes versus larger account sizes. And the issue, I think, with some new traders is about the expectations and the fact that they don't really understand. If they're just looking at the dollars and cents, it doesn't really give them a real good picture of what trading can do for them. So, you got to start looking at things from a percentage standpoint. You got to understand that it doesn't take a lot of money to make a lot of money if you have the skill set to do so, but you have to build those skill sets. So we're going to look at every facet of that, how we start out with a small account, what we should be looking for from a returns perspective, how we're going to achieve all of that. Just kind of keeping our psychology of that. Even if you are starting out small, you can do good things if you're willing to put the work in to learn the skills to do so. So we're going to talk a lot about that tonight on the coaches show.
Awesome. Very, very good. Excited as always to hear. And we'll see. Hopefully Noah can make it. If not, we'll get somebody in there with Greg to tag team that coaches show. Have some fun with it, Greg, Old Money Homes, and everybody out there. We will see you tomorrow in the halftime show.
Thanks, everybody.